now we're official, we're recording.
Perfect, thank you.
All right. Here we are.
All right, let's get ready again. I just want to help you folks learn how to buy a home, be it your first home, second home, investment property, things like that. So if this is first time, then a lot of this will be new information. For others that have already purchased home, this is going to be a refresher course for you. So we can go ahead and move on to the next. I'd like to discuss what our agenda is going to be. So the first step is going to be getting ready, which I kind of just went over. The next step is going to be what we need to do to buy your home. And Nicole will be going over that part of it with you. I'll go over getting your mortgage, closing your loan, and then Nicole will jump back in and talk about being a successful homeowner. So again, we're going to go over the best ways to approach looking for the home, and we're going to go over your credit, budget, and qualifications to purchase the home, and then what you need to do after you get the home. So in terms of credit, a lot of you know you have credit cards, you have car loans, you have installment loans, things like that. How do we establish good credit? Excellent credit comes from paying your bills on time, credit cards, installment loans, car payments, things like that. If you have credit cards, of course, credit cards are going to be, or revolving debt, we refer to it as revolving debt. That's going to be where a majority of your credit score comes from. So if you can keep your balances under 50% of the total of the value of the credit, if you have a $5,000 limit, you want to keep your balance at zero or as high as $2,500 to keep your credit scores as good as possible. And then again, making those payments on time is a huge, huge plus for you when you're making establishing good credit. Okay, if you have a lower credit score and you want to regain good credit, again, the best way to do it is to make your payments on time, keep your balances 50% or below, and every year, at least once a year, get a copy of your credit report, the free copy that is allowed to you by law, so that you can take a look and see what's going on with your credit. Make sure no one has utilized your credit without your permission. Okay, let's move on. And then an important step, of course, in managing your credit is to make sure you have a budget set up. A lot of times everyone has not been trained to create a budget and make sure you stay on budget. And that's where people get into being overwhelmed with, oh, how am I going to not make it? Okay, or they're living paycheck to paycheck. The best thing to do at this point, or previous to getting to that point anyway, is to create a budget. Now, living within means is always a great thing. Trying to keep up with the Joneses is never a good thing. Okay, I'm trying to make this as fun as possible, sorry. Sticking to your budget, of course, doesn't have to hurt. Make a plan and stick to it. I use a spreadsheet, an Excel spreadsheet, and I do a monthly budget. So I know what I have coming up, and then I also have, I use an envelope system to go ahead and save for my homeowner's insurance, save for my auto registration, because that is huge, insurance payments, things like that. So that all has to be put into a budget. And like I said, I have it in a spreadsheet, so I have it in writing. And of course, I have to look at this several times during the month to make sure I am in budget. And I may need to make some changes if there's special things coming up, like Mother's Day tomorrow. We have a gathering with our family. So I needed to make sure I have enough money for the gathering budget, you know, so I have to make some changes to the budget for things like that. So keep that in mind. Stick to your budget, but again, make it simple and make your changes, anything that comes up, make it logical for you to make it work for you. Okay. The next step is going to be once you have your budget, we want to determine whether you're in a position to buy yet, or if you should continue to rent. These are some advantages and considerations to keep in mind whether you're going to rent or if you are looking to buy. And of course, we want to help all of our clients and our customers to be in a good position to buy. So these are some things to keep in mind. Of course, when you're renting, a lot of people don't need to deal with maintenance and things like that. It's just, hey, call the landlord, let's see if they can fix it for us. Of course, my daughter rents. A lot of times she'll take the initiative though, because she really loves the little home that she's renting. And she'll take the initiative to go ahead and repair things, repaint, things like that. And her landlord works really well with her. Now, when she's going to buy her home, of course, she's going to be building her own equity. She'll be able to already know how to maintain a lot of these things that she's taking care of now in her rental. So things like that. Keep that in mind when you're telling your clients, which we're having our customers talk about whether they're ready to buy or if they want to continue to rent. All right. Let's see, next slide. I'm going to talk a little bit about pre-qualifications. Now, of course, we want to know what we qualify for versus what we think we qualify for. Rental payments now, I know everyone's rents are up. Yes, we should be able to afford the rental payment. We want to tell you that up to 50% of your gross income is what your monthly mortgage payment and all of your liabilities should maximize that. So monthly payment and all of your bills, credit cards, car payments, installment loans, things like that. No more than 50% of your gross income is the number that we use to determine what you can qualify for. I do a lot of pre-qualifications. Keller Mortgage is a little bit different, though. We take the next step, and I'll go over that in a future slide in a little bit. But generally, keep in mind for a pre-qualification and pre-approval, Keller Mortgage will need last 2 years tax returns, last 2 years W-2s. We do need a 2-year employment history for the client. We will need pay stubs covering a 30-day period, and checking, savings, retirement account statements, anything that's going to be used for down payment and closing costs. We're going to need statements covering 2 months, and it needs to be all pages, and we cannot use screenshots. They must be actual PDFs or photocopies of each page, or pictures of each page. All right, and I'm going to turn this over to Nicole so she can talk about realtors.
All right, awesome, thank you. So number one, first of all, I want to talk a little bit about a buyer's agent versus a seller's agent. So a listing agent is going to be somebody who lists the property. They represent the seller, right? They're the agent of the seller. That's who they owe their fiduciary duty to. The buyer's agent is actually going to owe the buyer their fiduciary duty. This is why it's really important, especially if you're a buyer and you're here today, it's important to work with your agent and get your buyer's representation agreement signed, because in the state of Hawaii, it's important that we actually have everything in writing and that agent is working for you for your best fiduciary duty. I do like to cover that in the state of Hawaii, dual agency is legal. That is a situation where either 2 agents from the same company, one represents the seller and one represents the buyer, or 1 agent from the same company is representing both parties. So that is legal in the state of Hawaii. It's really important to get clear on your criteria for your house, right? What are your must-haves? What are your nice-to-haves? We always say if you can find a home that actually has about 80% of what you're looking for, you're doing a great job. Think about it this way. Have you ever met somebody who built their brand new home and they built it from the studs up, and you go to visit them and the first thing they do is walk around and show you all the things they would have done differently or they should have done differently? There is no perfect home, right? Even when we're building from the ground up, we don't always get the perfect home. We're looking for about that 80%. What's great about working with your realtor, your agent, is they're going to help you understand the difference between what are your must-haves and what are your nice-to-haves, because that's a very important thing. Loan officer, you already met her. Lisa's our loan officer for today. You're going to be working with your loan officer as well as your realtor. All right. So buying your home, we're going to have a home buyer's checklist, right? What do we need? Things to consider. Taxes. Obviously, you're going to be paying property taxes. Now, for those of you who don't know this, in the state of Hawaii, your property taxes are actually going to be based on the use of the property. So you need to check with your realtor as to, they're different for every island, and it's dependent on what the property is being used as. So is it investment property? Is it the primary residence? You're going to want to check with your realtor as far as what is the taxes going to be. Something always to consider is the age of the home, right? How old is this property? How much maintenance do you want to do? As you're walking through, you're looking for maintenance issues as well as looking at how beautiful the home is. This is what's really nice about having a real estate agent with you. You can sometimes be looking at the property and be, wow, this is fabulous. This is fabulous. And we're looking for issues, right off the bat. We're like, what are the potential problems going on here? What can we see? So we're going to help you do that, but you're also going to have a home inspection, which we'll talk about in a little bit. Utilities, obviously you're going to have utility bills. In your property disclosure, you're going to have the past 3 months electric bills as far as what those cost for the current seller if you're the buyer, but sometimes that's not accurate because nobody's living in the property. So we want to get real clear, what are our utilities going to cost us? How much sunlight is the property going to have? We live in Hawaii. Do we have a little bit of sunlight, you guys? We do, right? Not only how much sun is going to be hitting the property and how is that going to warm it or cool it in certain areas, but also how is that going to affect your utilities and the wear and tear? Obviously, surroundings and location, right? Location is everything. What's the neighborhood like? Is it the place you want to be? Things to consider. And visit at different times of the day. Kind of get a feeling for what the property's like at different times of day. I always have, great conversation is to say, go visit it morning, afternoon, and evening, right? And even drive around the neighborhood and see what's going on in the neighborhood. I know some of the properties, people like them because people are out walking their dogs in the afternoons, right? So go see what's going on in that neighborhood. All right, so making an offer in the current market. Have any of you heard the term like, oh, we're waiving appraisals, or we're not doing home inspections, or we're not, right? Here's where your realtor is going to be really important for you if you're a buyer, because you need to know when those things are happening and somebody's giving you those options, what does that mean to you as the buyer, right? You need to get real clear on how could that affect you as the buyer? So if you don't do a home inspection, that could potentially not find something that's wrong with the property, right? So we want to be very cautious about these things. And as your agent, as your fiduciary, we're going to protect you. We're also going to let you know what's happening in the market and what we might want to consider, but also what those potential drawbacks could be. Because every time someone says, oh, we waived the appraisal or we waived the home inspection, that opened up for a potential for a very negative situation. So you need to know what that is and be informed as a buyer. So what are factors that influence the dollar amount? Oh, that's such a good one. You know what? Let me ask you guys, what do you think affects the cost of a property? I mean, somebody share with me. What do you guys think affects the cost of a property?
Maintenance.
Maintenance, yeah. So condition, absolutely. What else affects the property value?
Location.
And I needed it 3 times in a row, right? We've all heard that, haven't we? Location, location, location. Yeah, it's such a great conversation. Absolutely. And what that means is you want to know what's going on in the properties around it. What is the comparative market analysis is what we call it. And your buyer's agent is going to do that for you. They're going to pull all the properties and say, hey, let's see what's sold. Let's see what it's selling for. Let's see how long it was on the market. And let's make an educated decision on what we offer on the property, right? That's the great thing about having a realtor as your fiduciary. So yeah, location, 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 condition, and the market. That's the 3 major effects that will absolutely influence the dollar amount. So
Paul also says, supply and demand.
Absolutely. Yeah, that's the market. So supply and demand, right? How many properties are selling? How many properties are coming to market? And that comparative market analysis is absolutely going to help you with that. Yep. Supply and demand, cost of everything, right? So let's talk a little bit about contingencies. When you buy a home and you sign the purchase contract and it is submitted and they say, yes, we accept it, we're now opening escrow, which means you're going to come to the table with your earnest money and you're going to be officially in the escrow process. Generally, this is going to be 15 to 60 days. The 15-day ones are I'm paying cash, right? The 45 to 60 days are generally I'm getting a loan. Right now, just so you know, the one thing that is actually making loans go 45 or 60 days is the time to get an appraisal. So that's the market we're in right now. That's really affecting, it's not the lenders, they can get it done quicker than that, but it's the appraisers getting them out there. So usually a lender can do about 30 to 45 days. So your contingencies, you're gonna have an inspection period. That's your time as a buyer to do your due diligence. I always say it's the time for you to enter the property eyes wide open, right? What are the warts of this property? No property is perfect. I want to be aware of it when I come through the door, right? What can I do with the property, right? That's your time to do that investigation, that research. Those are your contingencies that are in place. If you're buying a condominium, you're going to have HOA documents. You're going to be able to review those and make sure that they make sense for you. You're going to be able to read the house rules, right? These are contingencies that you have in place. Now let's talk for a moment about counteroffer. So it is potentially possible that on your offer, you're going to get a counteroffer and they're going to counter some of the terms that you wrote in your purchase contract. When they give you a counteroffer, what they're doing is saying, we accept with a couple changes, right? And with any offer, that you have the right to do the same thing the seller did, which was accept the counteroffer, reject the counteroffer, or counter the counteroffer, right? Just like the seller had the option in the beginning to say, we accept your purchase contract, we reject your purchase contract, or we counter it. So sometimes we can go back and forth a little bit. If you're a buyer, I want you to be aware that it's okay to have a little back and forth until we all come to terms we agree with. So just something to keep in mind. All right, your home inspection. This is going to take about 2 to 3 hours. It's a very small condo. It'll only take like an hour and a half. I've seen really large homes take up to 4 hours, but generally it's about 2 to 3 hours. This can be a negotiation tool, but I want to be really clear. It's not something for the buyer to say, here's a list, fix everything, because there's always some things, right? You know the home is in the condition it's in, generally speaking. What we're really looking for in our home inspection is what are the major issues you're going to encounter as a homeowner, right? I always say, look at the safety issues, right? If something is a safety issue, that to me is major. The other thing I want you to look for is very heavy expense items, right? So if your inspector says, I really think you're going to need a new roof in a year. Okay, that's a very expensive repair, right? So we need to look at what are those. So having your home inspector is awesome. So it's a negotiating tool. The buyer pays for it. Generally, you're going to pay via check on the day of the inspection or via credit card before the inspection. So that's how the inspector is paid. You're also going to receive what's called a seller's condition report or a seller's property disclosure. These are really helpful because when you look through those, it's the seller being asked a bunch of questions about the property. And when you look at the answers, you can compare it to what was said to you in the inspection, right? So you can go, oh, inspector mentioned that they thought there was a leak here because it looks like there was some repairs. Oh, here it is in the disclosure. Now, the thing about the disclosure, I want you to understand, when you're a buyer, you have the right to say, I'd like more information, right? This is all you doing your due diligence. So please don't be afraid to say, I want more information on this piece. This isn't clear to me. I need to know more. So yeah, that's what your realtor is there to help you get those answers. All right, we're going to move back to Miss Lisa as we go into other expenses.
All right, thank you. That was amazing. Thank you. So other expenses to expect before we get into the closing, I'm going to strike one piece there. We do not have an application fee, so we can get rid of that. Your inspector does need to be paid prior to or at the day of the inspection, so you will need to be prepared for that. Your earnest money is going to be your deposit. When you write your contract, you have one earnest money deposit and you may have two. We will need to see receipts for both. We will need to see that money coming out of your account via a withdrawal slip and or your bank statement. Okay, so just keep that in mind. The appraisal fee, we're not going to collect an application fee or any deposits from you at the beginning of the transaction. We will collect the appraisal fee at closing. If for some reason you do not close your loan, Keller Mortgage will not charge you that appraisal fee, so just keep that in mind. When we go into closing, we will give you the final closing disclosure, which the day before the actual signing of your closing documents, I should be able to give you the final figure, what we need your wire or cashier's check to be. That will include your earnest, your deposit, your down payment, as well as all of the closing costs. We will ask you in advance, of course, what your homeowner's insurance or who your homeowner's insurance agent is going to be, and we will get the premium amount and include that at the closing. So you will have to pay 1 year of homeowner's insurance at closing in advance. And we're going to set up your escrow account. Now, what is escrow? Not the escrow that you will be in during the purchase of the property. At closing, we're going to establish your escrow account, which is when you make your monthly mortgage payment, it's going to include 1/12 of the payment for property taxes and homeowners insurance. And then we're going to deposit that into your escrow account. When those payments become due, then we're going to go ahead and pay that for you on your behalf. So that's what it is, what an escrow account is. And I'll go into that in one of the next slides into a little bit more detail. Now, please know your rights. Of course, as a home buyer, Nicole already said, know what you're buying, take a look with open eyes. On the lending side, we have a lot of guidelines and regulations that we have to follow, including the Fair Housing Act that was enacted in 1968 and the predatory mortgage lending that was a result of the 2008 mortgage crash. So the Fair Housing Act. Now, the goal was to eliminate discrimination and to protect you as consumers. This is written everywhere. You know, there's no discrimination in your title report. You will see that even on your deeds. There's all kinds of language regarding discrimination. The Fair Housing Act includes unfair. We need to look for and be aware of unfair activities which would deny housing. Okay, and then you want to make sure that you're using a well-respected and trusted lending institution that's not going to gouge you with costs and things like that. And just as a side note, Keller Mortgage does, as a we do work with the Keller Williams agents, and we do have certain discounts that you will not have to pay as part of our Zero Plus program. Again, I'll go into that in a little bit later.
Lisa, you went mute and I couldn't hit my button fast enough.
Sorry about that. I don't know what happened. I didn't touch anything, I promise. Okay, I don't know what you missed.
This whole slide.
All right,
so you went mute right before this whole slide.
In our industry, that's so strange. We have a lot of acronyms, and acronyms in this case is PITI, which stands for principal, interest, taxes, and insurance. So the principal is going to be the monthly part of the mortgage payment that's based upon your loan amount and the final interest rate that you may be locked at. We are going to estimate your interest until you actually lock the interest rate. So here's the principal. Interest, I just went over that, is the interest that you may or may not lock. And hopefully we lock early before rates go bad. Taxes and insurance, I did mention that earlier. When you make your monthly mortgage payment, we are going to, and including insurance as well, we are going to take 1/12 of that total payment. For instance, if your if your property taxes are $1,200 a year, just to keep it simple, we're going to collect $100 each month towards the property taxes. Now, property taxes are due twice a year, in February and in August. So we will, depending on when we close your loan, we're going to adjust and collect the appropriate amount of property taxes at closing, so that when the bill comes due in February or April, no, February and August, we'll be able to make that half a year's payment to the state, no, to the county when it comes due. Does that make sense? Hopefully it does. Now, we do have different types of loans, including the fixed rate loans, and I mostly only do fixed rate mortgage loans, and mostly 15-year or 30-year fixed rates. I hardly ever do adjustable rate mortgages because those are going to be, I believe, for more savvy borrowers that are familiar with how adjustable rates work, because they may start at a really low rate. But once we start adding in the margin and the index, and over time, the interest rate will go up or down depending on what's happening in the market. And as you know, the market has been going crazy. So adjustable rate mortgages right now are going up. Okay, so I will probably price borrowers currently, I will generally price borrowers in a fixed rate mortgage. And again, we only have 15 and 30-year loans. There's no other types of amortizations. I've been doing this long enough so that I know, you know, like I mentioned earlier, 50% is going to be the maximum that I can qualify you for. So if you're really close to 50% at a 30-year amortization, you're probably not going to qualify for a 15-year loan. And on the next slide, we're going to talk a little bit about down payments. Now, for first-time home buyers, Keller Mortgage does offer either 3% down if you have good credit, or 3.5% down on an FHA loan. We do have for subsequent, if you're not a first-time home buyer, the minimum down payment is going to be 5%. If you do not want to have mortgage insurance, there's either private mortgage insurance or monthly regular government mortgage insurance, FHA, things like that. You're going to want to have 20% down. Now, here at the bottom in the example, we have VA loans, FHA loans, private mortgage insurance. If you have less than 20% down, I also want to include USDA loans. I know the Big Island is all ag, so all of the Big Island does qualify for USDA loans. You have to have good credit though. Parts of Maui, most parts of Maui is eligible for USDA loans, except for I think Kahului zip code. And USDA is determined, eligibility, property eligibility is determined by zip code. I think most of Oahu is not. Okay, so I mentioned private mortgage insurance earlier, and then we talked about homeowners insurance earlier. So private mortgage insurance, if you have less than 20% down, we do require private mortgage insurance, which is different from homeowners insurance. So PMI, which is the acronym for private mortgage insurance, covers the lender in the event of a foreclosure or any other type of issue. And this, again, this is if you have less than 20% down. So we do have percentage scales based on your credit, based on the amount of the down payment, things like that. So it is a percentage based upon the percentage of the loan amount. And if it is a conventional loan that you're getting your private mortgage insurance with, it can be eliminated depending on several factors. It depends on the loan to value. You may need to get an appraisal, or you can bring your mortgage balance down to 78%. So that takes at least 5 to 7 years. And after 7 years, I believe it could automatically be eliminated. It just depends on where, you know, what's going on in your market, if you've made additional principal payments, things like that. versus homeowners insurance, which is going to cover your home and all of the things within your home. That's what homeowners insurance is versus, the private mortgage insurance, which covers the lender. Does that make sense? Okay, I see you smiling over there. All right, next slide. So advantages of private mortgage insurance. Again, this is if you have less, if your buyer or you the buyer have less than 20% down. Because we are allowing you to come in with at least 3% down for first-time home buyers or 5% down for subsequent home buying for your loan, you are able to purchase your home sooner. Then we also have the premiums that are maybe tax deductible. So you will have to on the next, there you go. You'll have to talk with your tax person about whether or not it's going to be tax deductible. And then, of course, I just talked about how private mortgage insurance may be canceled. Okay.
Sorry, I
Now,
went too fast.
that's okay. I was at the end of that. All right. Now I talked a little bit about pre-qualification versus pre-approval. Now Keller Mortgage does have an online application link that you can get from your agent, and agents, you can get this on your Kelly app. In your portal, and you can share the link with your clients. It takes about 7 to 10 minutes for the client to complete. And the items that they will need include 2 years tax returns, 2 years W-2s, the employment history, make sure they're covered for at least 2 years, paycheck stubs covering 30 days, and all of the asset statements covering 2 months. Now, at this point, within the online application, your client will also be e-signing the affiliated business disclosure because Keller Mortgage and Keller Williams are owned by the same company, same people. We are affiliated companies, so there will be that form for you to sign. It takes 7 to 10 minutes to complete. You will create your online secure credentials, and then you can upload these documents right into the portal. And this will be the portal to use all the way through the transaction when you go into contract. So next slide is going into contract. So when you go into contract, you have chosen your home. Oh, I'm sorry, let me step back once. You can leave this slide. We do a full pre-approval once we have the 4 pieces of documentation. For self-employed borrowers, it's a little bit more documentation that we would require. Once I have all of the documentation, I actually submit your file to an underwriter, and he or she has 48 hours to provide your borrower with a pre-approval letter. We have changed our verbiage in the last 2 weeks, however, and made this a conditional loan approval. So your buyers will be able to include that conditional loan approval letter in with their offer. And again, it's fully underwritten. So the only thing, once we go into contract that will need to be underwritten is going to be the appraisal and then the title. And if it's a condo, then we have to review all the condo documents and things like that. So here we are at contract. When you go into contract, we are going to do the disclosures, review the contract. You will get the loan estimate and then a commitment letter, which is a second conditional loan approval. We do provide conditional loan approval at the beginning of the contract process. So we have the loan reviewed. Once I submit the file for disclosures, the loan is reviewed by the processor, and then he or she will, actually we have 2 processors in our team that are women, and they're based in California. So they're 3 hours behind us. They will make sure I have all the documentation needed to submit the file for conditional loan approval. And within another 72 hours, we should have the first, or the second, I should say, conditional loan approval, subject to the review of the appraisal and the title. let's see, at this point, we will also ask you for your insurance agent information, because in Hawaii, you are required to have homeowners insurance and hurricane insurance. So we will be getting that information upfront at the beginning. My processing team will contact the client at the beginning of the process, because they pretty much take the file from there and gather all of the documentation from your client, from the buyers, so that they can expedite and make sure we can get to the closing table as quickly as possible. Okay. Once we get the appraisal, and we can move to the next slide. Once we have reviewed the appraisal, we have reviewed all the title, everything looks good, we're going to move to the closing table. And generally 3 days prior to the closing date on your contract, I'm going to set up your signing with, and it's probably going to be with a mobile notary if the escrow officer is not available to have you sign your closing documents at the escrow office. So you're, again, the day before you sign, we are going to balance with escrow. My closing team will get together with escrow and make sure all the numbers match. And I'm going to provide you at that time with the final figure needed for your certified check or wire. You will need to bring the certified check to the closing table when you go in to sign your documents, and you will receive a copy, an unsigned copy of all of the documents that you will be signing that day. Now at closing, which is the day, 3 days after signing, Nicole is going to have your keys, and escrow will email you your final closing disclosure.
Oh, I won't have your keys. Your agent will have your keys. But I
Oh,
do
that's
want to
true.
point out a couple things that Lisa just said that I want to make sure that you guys heard, because she kind of said them nonchalantly like they weren't that big of a deal, but they were a big deal. Number one, did you guys hear her say that if you don't close the loan through Keller Mortgage, you will not have to pay the appraisal? That's not a standard of practice, you guys, just so you know that. For those of you that are buyers, that's huge. Properties can fall out of escrow, and if the appraisal is already done, generally that's something the buyer has to pay for anyway, whether they close or not. So that's pretty amazing that she said that. She also said we get conditional loan approval in the beginning. That's generally something we see about 15 days before closing. So to have a conditional loan approval in the beginning is a huge value, to be able to hand that to the seller and say, we are this qualified, right? So just keep that in mind. Anybody who's a buyer on here, that's like huge. That right there makes you stronger as a buyer with a loan. So I just want to make sure. And then Lisa, do you mind clarifying, because you mentioned first-time home buyer, but I don't know the rules around it, but I know that to qualify as a first-time home buyer, it actually doesn't have to necessarily be your very first home you've ever purchased in your life. Am I correct?
That's correct. As long as you haven't held real property in the last 3 years, you are considered a first-time home buyer.
That is very cool. Thank you for clarifying that. And then I also wanted to point out that I've seen situations where I think a lot of us hear the term PMI and we go, "Ooh, I don't want to pay PMI. That's horrible. That's awful." I've seen situations where sometimes buyers can keep 30,000 of their money to pay 75 extra dollars a month on their PMI. So, don't be afraid of having that conversation with a lender. It's just something that's worth talking about. So just keep that in mind. All right, so moving on. So buyer receives at closing. Yes, you're going to get your final closing disclosures and your keys to your new home. What's very interesting, and I do like to point out about Hawaii, is we don't have what are called table closings. So for any of you that have purchased property on the mainland, you may have had a situation where you went in, you signed your papers, you bought the property, they handed you the keys. We don't function that way in the state of Hawaii. You're going to actually sign 3 days prior to closing. You're going to receive your keys from your realtor 3 days later. So just keep that in mind, something to be aware of. All right, talking a little bit about maintaining your home once you own it. We want to keep the maintenance up, right? So we want to work on the lawn and garden. We want to make sure the exterior stays, in great shape. Better exterior is going to include keeping the interior better. Pest control. You're going to need some power tools to take care of depending on what size of property you have. Appliances, appliances, if they're well maintained and repaired and you know, we keep them up to date. If you hear a noise, call someone. Don't just assume, because it's a whole lot easier to repair something when you know it's happening versus something just dies on you, right? That's never a comfortable thing. And furniture, obviously something you want to have for your property. So these are some things that might also cost you. So we always want to have you have that conversation with yourself. What do I need to have in reserves to maybe furnish and get some power tools and be able to be able to maybe even pay for a pest control company. So just some things to think about with your property. Expect the unexpected. If you are a renter and you end up a homeowner, remember you don't get to call your landlord when something goes wrong. It's on you. So expect the unexpected. Always establish a reserve dollar amount that you have. And by the way, for those of you that are buyers in here, you know, your lender will generally have a vendor list. So if you need someone, call your realtor. They're gonna, did I say lender? I meant realtor. Realtor is gonna have a vendor list. Call your realtor. They're going to have someone that they can probably provide you info for plumbers, electricians, you know, roof repairs, painters, all that fun stuff. So rely on your realtor. They're here to help. And most importantly, enjoy your new home. This is such an exciting thing to be a homeowner. So it's just, it's there for your enjoyment. Enjoy it, live in it, have fun with it. I'm going to let Lisa finish up. She's got some things she wants to share with you regarding the Zero Plus mortgage and what they offer through Keller Mortgage, because it's a really great system along with those other pieces that I already mentioned. So take it over, Lisa.
Thank you. Thank you. So yes, I hope this information that you have, that we've given you, is going to assist you with purchasing your home. With the affiliated business disclosure comes this Zero Plus program. When you're working with a Keller Williams agent and me at Keller Mortgage, we're going to give you zero lender fees, which means we're not charging you for processing fees. We're not charging you for underwriting fees. So that's going to save you a couple $1,000s already. I'm also going to give you $1,000 closing cost credit to be used towards the cost of the appraisal. Generally, the appraisals here in Hawaii have been around the $1,000 range, and depending on how much work they have to do, it could be even more. I'm also going to provide you with a discounted interest rate. Keller Mortgage does have excellent interest rates. We are competitive with the rest of the market. So that's what our Zero Plus program is when you work with your Keller Williams agent and me as your Keller Mortgage loan officer. I did also want to share a couple, well, maybe one story just based on someone that didn't think they could purchase right away. So just to keep it real, I had a customer that actually was a previous Keller Williams agent, moved from California and over to Colorado. Didn't, you know, he did a couple of different things after. He didn't renew his license for Colorado, so he decided, you know, he was going to work at Costco just to, you know, help with his new life that he's started to build there in Colorado with his brand new wife. So they're both there in Colorado, you know, not quite at Costco for 2 years. However, he did build up some other things before he had moved over from California. So wasn't, you know, it was pretty iffy to see if he could qualify to purchase a home. So it took a little bit of work for us to get to where he could qualify with his wife. And then they decided, hey, we're going to go and look at some new builds and see what was available. And the new build was 3 or 4 months out. And this is just at the beginning of where the market started going up. The interest rate started going up, and it's like, oh, I don't know if we can wait that long, because Keller Mortgage doesn't have a 90-day lock period, I'm sorry to say, you know, so we need to wait until you go into contract to lock. So rather than wait for 90 days or longer on this new build, there was one that fell out of escrow that they were able to purchase within 30 days. So this escrow, the guys did actually qualify for the house that fell out of escrow with a different buyer, and they were able to get in less than 23 days. So, you know, that I think was a win. We didn't know 2 months ago that whether or not he could qualify, but we figured it out worked together, lots and lots and lots of communication. And lo and behold, within 23 days of making the offer and then switching properties, we were able to close in that short period of time. Fortunately, the appraiser was able to get that appraisal to us quickly. So yeah, we were able to close in less than 30 days. So that is that is one of my success stories that I wanted to share with you. I am available all the time. I may not answer the phone all the time. There's my office number there here in Lahaina. It is an Ohio area code, but you can always reach me by email. Leave a message on my phone. If I don't answer, I will call you back within 24 hours. All right. Now, let's see. I did also want to say, if I know I saw some of you really writing down a lot of the notes that we were going through. I do have a workbook that I would like to I will give to your agents for the buyers that may want to get a copy of the workbook. So I'll go ahead and share, send over the workbooks to the agents that are on this call, and then you can get agents, you can get this workbook to your clients. So let me know, shoot me a quick email, let me know which offices I need to send the books to. Okay. Let's see, within the book, of course, we go over the down payment information again, interest rates. There's a budget worksheet for you to fill out. There's the income worksheet as well, and some information on how to qualify for the loan. All right. So
we'll make sure we get some books in all of our offices so all of the agents can connect with those books and send them
Absolutely.
to their clients that are here in attendance. Yeah, and I know we actually have some buyers in here that agents weren't able to attend today. So we'll make sure that they get those for you guys and that they can share them with you. Yep, 100%. Awesome. Well, I appreciate you guys showing up, and I appreciate who brought you, your agents, for letting you know this was going to be happening. We want to open it up for questions. This is about, what do you want to know? What are you curious about? What are you not sure about? You know, ask us. We're here. We're here to help. Yes, Javed.
Thank you. Thank you so much, Lisa, for all the valuable information. One thing just struck to my mind that we're supposed to work with the local lenders, especially being in Hawaii. And what I learned from Lisa, that she has two wahines to work in the California, the time difference and so forth. How does it benefit a Hawaii agent? Another thing that I learned, if it's a contract written, seller agent will definitely recommend the seller to go with somebody who is working with the local lenders. So how does it work with the Keller Mortgage?
I'm actually local. I live on Maui. I am the only local Keller Mortgage agent here in Hawaii. There are quite a few of us licensed to lend in Hawaii. I actually live here, so I am your local lender.
Yeah, what are the keys to that? And I'll speak to that too, Javed. One of the keys to that is if we're on the selling side and we're the listing agent, we see a lender's name that we don't know is local, we're going to go, okay, red flag, right? Because a lot of people come to the islands and they go, I'm going to use my mainland lender. And, you know, the first question is, how many loans has your mainland lender done on the islands? Because often the answer is none, but they're allowed to. Well, just because they're allowed to doesn't mean they know how, right? That's the issue, is the lot of lenders from the mainland are licensed in Hawaii. They don't understand our market. And so Lisa being here and living here, she understands our markets. That's the key, is you want a lender who actually closes loans on the islands. So that's the first question. Yeah, is have you closed loans on the islands? And often they go, no, but I have a license there. It's like, no, you don't know our market. You don't know we have all kinds of intricacies, don't we? Yeah, our houses are different.
We do, absolutely. I mean, I just learned that Kauai's CPRs are different than Maui CPRs. So, you know, that is something that every island has. Now, in terms of the Big Island, they have lava zones. The rest of the islands don't. We actually can lend in Lava Zone 2. However, it's only going to be for VA loans. Otherwise, it's going to be conventional loans for Lava Zones 3 or higher. Now, my team is located in California and all the way through the rest of the nation. So I work with the different time zones. So, so I'm up early so I can make sure our loans get through in a timely manner. Okay.
We did have a question, Lisa. So the minimum down payment, the 3 to 5% would be for a primary residence, correct? What about investment properties?
Yes, investment properties, it depends on the loan amount. Generally, if it's a conventional conforming loan amount, which is going to be under 970,000 for Maui, I don't know what the jumbo loan amounts are for the rest of the island off the top of my head. Sorry about that. The investment properties can be as low as 15% down. It may be more depending on the type of property, the loan amount, and things like that.
Yeah, it's an interesting conversation, and that's why there's so many nuances, and your realtor can help you, because we need to know what's the property. Like, certain properties have front desks, which makes them condotels, which makes them totally different. Some actually have, you wouldn't know this, but they have some timeshares within the property. So because it has some timeshares, there's lenders that are like, I'm hands off. So you have to find out who will loan in there. But that's a great question. Yeah. So 15% is about the minimum we'll ever see on an investment property at this point. And depending on what it's used for, could actually affect, it could be as much as 20 or 30%, depending on the property. Yeah. Great question.
Okay, Lisa, this is Andrew. First and foremost, thanks for all the information. It's been amazing to get the information. I'm a veteran, and so I'm looking at going VA. As far as my loan. So the thing is, for years, I've been wanting to get into real estate and stop paying rents. I guess the question is, once the VA loan is done, what is the time frame as far as moving into investment properties?
Well, VA loan is not eligible to be used for investment properties. Your VA loan is for primary residence only.
Mm-hmm. I guess what I'm asking is,
property?
Yeah, I'm going to live on the property, but I guess the question I'm asking is, how long do I need to be in my residency before I can seek out investment property? So I wouldn't use the VA loan to try to do investment property, but how long would I need to be, so to speak, in my own home using the VA loan to actually now go out and buy investment property?
As long as your financial profile allows you to purchase investment property with the VA loan, principal, interest, taxes, and insurance payment,
Mm-hmm.
You can shop for investment properties right away, as long as you can qualify.
Okay. Good to know.
Yeah, great question. I think it's all having to do with a personal profile picture, right? So what are you looking to get into, and what type of investment? And, is it something on the islands that's, 500,000, or is it something in Ohio for 120, right? Like, what do we qualify for? Yeah.
Okay.
Yeah. And don't be afraid to invest all over the country, because investors do, right?
True. Okay.
Definitely something to keep in
That
mind.
is a
Great
good question,
Andrew. Yeah, that's a great question. And by the way, you guys, I think the VA loan is the sweetest, most awesome thing. So my father bought his home on a VA, and I always say this is the one thing we do right for our vets. It's the one thing we've got. It is the best loan, like absolutely 100% loan and no PMI. The vets actually, Veterans Administration, VA is covering your PMI. They're saying, we guarantee this loan. It's amazing. It's one of my first questions with buyers. Are you a vet? It's such a great loan. So good for you, Andrew, and thank you for serving.
Thank you.
All right. Who else has got questions for us? Anybody? We covered it all.
Hi, Nicole. It's Joanne.
Hi, Joanne.
Sorry, I don't know why my camera's not working, but I just wanted to say thank you to both you and Lisa. It was a great presentation, and I'm just glad to see some clients that made it on, and just appreciate it. So thank you very much.
Yeah, this is great. And we are recording it. So for those of you that are agents, and some of you I know had some people who wanted to come on and didn't make it, we'll make the recording available, and you can share where it's posted to. So if you have anybody who wants to watch this, they can feel free. Yeah. Awesome. All right. Anything else? Guys feel like you got a good understanding? You're feeling good? No other questions? All right. Well, I want to thank Lisa because I think Keller Mortgage has an amazing program, and being that she is here, she lives on the islands, you know, she's our local gal and she is just awesome. Working with Keller Mortgage on the mainland is just not the same situation, and Lisa's wonderful. So please feel free to reach out to her. Actually put her phone number and her contact information in the chat. But also, you know, contact your real estate agent because they would be happy to share her info with you and you could take advantage of some of those things. And no joke, you guys, I just recently had an escrow fall through, and it was actually our agent represented the seller. And the buyer was trying to get the sellers to pay the appraisal because they weren't with Keller Mortgage, and the loan and the property fell out, and they had to pay that appraisal, and they were trying to cause a battle. It was like, well, they just shouldn't have to pay it if they go to Keller Mortgage. So, you know, having the right people on board just makes such a big difference. So we love that we have this asset. All right, you guys, wonderful. Thank you so much for coming. Enjoy your Saturday. And for you buyers in here, let's get you into a property. Get you in there, right? Get you
Take
building
care,
your
everyone.
wealth, not your landlords, right? Love that.
Absolutely.
That's right.
All right, guys, have a wonderful day. Thanks, everyone.
Aloha.
Thank you. You too.
Aloha.
Bye.
Bye-bye, Lisa. Mahalo.
My pleasure.
I just wanted to let you know real fast, Lisa, that I'm going to post, Joanne, actually, it's the one who's on here. She asked for the slides. I'm going to post the slides and the recording in our Google Drive so all of our agents can access it, because I know there were
Awesome.
quite a few other people registered that probably just couldn't make it. So
Sure.
we'll
And of
post
course,
it
I
in
know
there
we'll
so they can
we'll
check it out.
schedule another one.
Yeah, absolutely.